Second. Hello everyone. Hope that you guys had a wonderful training with us for. I hope that you saw enough that would help you. What do I mean by that? You saw enough that would help us. The main thing that you guys should be doing right now is back testing and forward testing. Right? Of course there's some of you right now that have been here for years, meaning you've been in the industry for years. So, you're passing your challenges, you're already trading, you just came in here for a little sauce that might have assisted you already. But for those that are new, you should be forward testing, meaning that you should be watching current price action, whichever session that you choose to do so, right? And this is the actual, important information right now that I'm telling you, not some concept, right? Some brand new concept that you've never heard about before. But, these, short messages that I'll give you, these tips that I will, hand over to you, right? It's the thing that is hard, the thing that is boring. And that is what will actually help you. That will help you to find, your own stuff that no one else could see before, right? You'll discover something. You might discover something if you look long enough, because there's a lot more that's there, right? In comparison to what I have talked about thus far, and in comparison to what I will speak about during the course of this year, right? So with that being said, let's begin. As you guys can see on the screen right now, we have the economic calendar, right? One of the most, overlooked tools in the trading industry, right? People really use this thing. Right, on Monday, you can see Monday, Tuesday, these days right here, I would categorize as no trade days, right? Just due to the fact that, we have these news so late down into the day. Here at Tuesday, you could see that we had President Trump speaking, which is just some, if anything is random in the marketplace, it will be whenever the president speaks, right? That's usually the only thing that you can't really anticipate whenever the president is going to speak, right? Usually after days like this, where you have Trump speaking, you have, whoever important person speaking that can have an influence on the way the market moves. The day after, whereas we have a blank day, we should see sequential SMT form here, or if it forms there, it will be high probability, right? So yes, here on scheduled news events, and then you have a blank day. It's Wednesday, Q3 of the week. There we go. And then Thursday, which is today, on Wednesday, my bad, right, is a day that you'll see sequential SMT form. On Thursday, which is tomorrow, you should see the continuation of whatever occurred here, right? So if this propelled the market down, Wednesday should propel the market down as well. And Friday should return the market to the range that it formed over the course of this week. Here you guys can see that we have the FX triad, right? Very important, right? The FX triad is important, and the futures triad is important. And, as this may sound weird, but the FX triad is more important than the futures triad, right? It influences the futures triad more than the futures triad can influence it, right? So here you can see that we had a cracking correlation here, whereas the dollar index pushed above this high, the euro pushed below this low, but here we had the British pound, just forming a swing low. So at times like this, right, when you have SMT, it doesn't have to be sequential. It could just be regular SMT, right? And one candle will, give you confidence or help you to spot whenever there's a reversal, because it's not that SMT doesn't work. It's just sequential SMT that works. That's not the case, right? The thing is, sequential SMT work and SMT works in specific conditions, right? When specific things follow the formation of a SMT. So here you can see that, and I'll put a little bit of lipstick on the dollar index. Here, this candle right here, and for those of you that need this, I'll turn the crosshairs on. As you guys can see, this candle right here, right, is a up close candle for the dollar index. What does that mean? That means that for the other candles to be in line with the dollar index, right, every candle should oppose it, right, if you're looking at the euro or the British pound. So here on these candles, and I'll start here, this is a up close candle. Right here we have a up close candle in the dollar index. That's a down close candle for the euro, and that's a down close candle for the British pound. Here we have a up close candle for the dollar index. That's a down close candle for the euro, and that's a down close candle for the British pound, right? So everything here is in line. This is what price should actually be doing, right? And before talking about this specific candle right here, we're going to talk about this one right here, right? As you guys can see, this was, in perfect correlation. There is nothing wrong here. This is just a regular day, which is why we saw price just pull back and went higher, right? Even though this was quote unquote SMT already, right? This was already SMT, but we did not have this candle, formed as yet. So here we have this candle. It's a down close candle. Within the euro, it's a up close candle, but within the British pound, it is a down close candle. So now you can see that we have a crack in correlation between candles, right? This down close candle here and this down close candle here is where we have a crack in correlation. This is called a precision swing point, right? So on a regular day with regular price action, right, the candle should, if the candle is up close for the dollar index, it should be down close for the euro and down close for the British pound. Whenever you see a up close candle in the dollar index and a up close candle either in the euro or the British pound, that is a precision swing point, as long as the point at which it formed, or the candle of which it formed, was a swing point, right? We just add precision to the swing point, right? So we'll get back to precision swing points in a minute, right? And now we'll just, give you guys something fairly easy to understand, right? So here you can remember we had SMT down here, sequential SMT, which is why we expected higher prices, and we got much of that until this candle formed, right? On this candle, you can see that we traded high, but we did not go above this high right here, right? And the closures are the same. We did not close above this candle right here, looking at the S&P 500. Within the NASDAQ, you can see that we did not trade above this high. So here, there was no regular SMT, no regular sequential SMT or anything like that, right? But here, we closed above this candle's highest close, right? So if we remove the wicks right here, and the same that occurred within the E-mini S&P occurred within the Dow, right? If we focus on these closures right here, you can see that price closed above this close. It didn't trade above the high of this candle, but it did close above this close right here, right? And here you can see that price closed below the highest close within this week, and the same thing occurred here. This is called hidden SMT, right? If it is sequential, then it will be hidden sequential SMT. So we have a cracking correlation at the highs right here. We have one in the low. We had one at the lows right here as well, and that is why you see this type of price action right now, right? So yes, this part is kind of boring. What are you showing me how to see? Hard to read price action. You're showing me how to spot a consolidation. Yes, that's pretty much what it is right now, right? So there are times when you'll see sequential SMT, then you'll see sequential SMT at the top, again, R hidden, market sequential SMT, and then you just see price fall back within the 50% of the range right here. Now here is another example of what occurred on the higher time frame, but this is the 1 hour time frame, right? So here, price traded above the high of this quarter right here, right? This is the weekly cycle, of course. This is Wednesday, right? This is Wednesday. This is Tuesday. So price traded above Tuesday's high during Q3 on Wednesday, right? Then we had price fall here, didn't fall below this low, right? So we broke this high, and if you look over to the left, right, you'll see this fair value gap right here, right? This is the last fair value gap that formed on this cycle, right? Within this cycle right here. So this is the last fair value gap that formed within Q1. And then we have the highs right here below the equilibrium of this range, or just at the equilibrium of this fair value gap right here, 50%, the consequent encroachment, as Michael would say. Right, so we traded above this high. There was a correlation here. This is sequential SMT. We're going to expect price to break down. And it also traded within this gap, right? Here, you guys can see we failed to break above Q2's high here during Q3. Price traded lower, formed a swing low right here, right? And also price did not trade into this gap right here, right? Price did not trade into this gap right here, right? And what is that? This right here is what I call a SMT fill, right? So price traded into this fair value gap above these highs, creating SMT, sequential SMT, traded within this gap right here, then just broke lower. This right here failed to trade above this high, and it also failed to trade within this gap right here, right? Price fell, signal. Now here is where we have, most of the mechanisms, being put into place, right? This is what the Dow usually does, right? Dow is just there for manipulation. The Dow is just there to create cracking correlations, right? So here we traded above this high, Q2's high, fell back, and then broke below Q2's low right here, creating turtle soup on both ends, which initiated a cracking correlation for these two other asset classes, which is why we see price fall, then just rally higher before taking this low. This is why. Now here is where we'll go in depth of the precision swing point, and here you'll see a precision candle. So just by looking at the fibs, right, this candle right here, it's a down close candle. Looking at the S&P 500 down close candle, fibs show you where this would be the low of the candle, this red line, and this black dotted line would be the high of the candle right here. Here, this is a down close candle again, high of the candle, this line, low of the candle, this line right here, here, high of the candle, here, low of the candle, right here, right? So as you guys can see, this candle, right, which formed as the same time as the other candles, and I have to show you this so you see that it's real. And this is how you would actually, backtest. You go through your charts, you mark your charts out, and you just pay attention to details. So here, not only do we have a precision swing point, and this is a precision swing point within the Dow, it's not a precision swing point within the NASDAQ or the S&P 500. That's a precision candle. That's a PC. This is a PSP within the Dow, right? Swing point right here. And it is important to note that this precision swing point and this precision candle formed when? After we had sequential SMT, right? And this is a Wednesday as well, right? So we have price trade above Tuesday's high on Wednesday. Remember, on Tuesday we had Donald Trump talking. We had, those unscheduled news events. Here, this is a blank day. Price traded above this high. And remember, you need to be looking at the correct time frame for these signatures within price to form, right? So for the weekly cycle, it's the 1 hour time frame. For the daily cycle, it's the 50-minute time frame. For the 90-minute cycle, it's the 5-minute time frame. For the microcycles, it's the 1-minute time frame, and so on. If you didn't catch that, don't worry, it'll be recorded and you can watch it again, of course. So yes, here you can see we had sequence SMT. There's a turtle soup here. Price traded above Q2 is high, Q3, S&P 500. Price failed to do that within the NASDAQ. Price failed to do that within the Dow. So here you can see that whenever you see this happen, right, a precision candle, that is what's we're looking at within the S&P 500 and NASDAQ, and the precision swing point is within the Dow, right? So whenever you see a precision candle or precision swing point form, because one or the other is usually there for there to be a formation of either of them, right? So the unclosed candle, price breaks below that, right, and trades back up to the area of this candle right here. That would be your entry point, right? Whenever price trades back to the precision candle, even if it's within the precision candle, hasn't broken below it yet, but it has broken below the 50%, you can still trade whenever price trades back up again, up, to the 50% on your stop here, as long as there's there's sequential SMT. Now here you can see same thing happened. Price broke below this candle, then traded back up into this candle right here, which is what the precision candle, right? Someone's asking for the fib levels, so let me show you guys real quick right now. I won't have this up for more than, let's say, 20 seconds or so, just due to the fact that it'll be recorded, so you can pause it after and just rewatch. So there you go, take a screenshot if you want to. And here within the Dow, you can see the precision swing point right here. Price traded, broke below, then returned back into the candle, then we had price expand. So this is not the only thing that's here. And if I don't talk about this again, I bet that much of you guys wouldn't have seen. So here also we have what? Sequential SMT again, but it's on the lower time frame, right? So here you see this candle, and let me just take the cross here. You guys can do this for your own homework, go dig into price and learn and see this for yourself, right? This candle right here is a swing point on within each asset, and it is a, what would we call it, a higher high within the S&P 500, but it's a lower low, a lower high, my bad, within the NASDAQ, and it's a higher high within the Dow. Now, this candle right here is a lower high within the S&P 500, but it's a higher high within the NASDAQ, and it is a lower high within the Dow, right? Another thing to note right here is what again? What else is here that I haven't talked about, right? What is it? You guys know what it is. Come on. It is, let's see if anyone will get it. No. It's a SMT fill. So right here, right, and it will be better to This is terrible. So this is a SMT fill. On the lower time frame, it's harder to see the fair value gaps, but they're here. Right? So again, we'll talk about the SMT that occurred right here. After all of that occurred, at the actual top, which was right here where you see this, press action occurring. Where is it occurring within? This is the, precision candle right here. You can see this is the lower half of the precision candle. See this 50%, price traded above the 50%, dropped here above the 50%, dropped here, price traded above the 50%, but it's been above the 50% and it just dropped again. Now here you can see that we have SMT occurring within the precision candle as well, right? So here, price failed to trade above this high. Here, what happened? Price traded above this high right here, creating the SMT. And then here, you can see again, price failed to trade above this high. So yes, I hope that you guys, so this one right here, right, this lesson, it's very important to grasp, in my opinion. I think if there's anything that I wish I learned, back in my younger days, I'm still young, kinda. I'm 27 now, is that young? I don't know. Right. So if there's anything that, I would stress people to grasp, it would be this, right? Understand sequential SMT, precision candles, SMT fills, and just put them together and watch, things happen, right? All over my page. Even I think there's leaked information that, people are always texting me, oh, thank you for this. Thank you for this. Right? This, I get hundreds of emails, and I get emails from you guys, I get messages from you guys, I see your progress, and, it's something that's amazing to see, which is why I stuck to just having a smaller group, right? As you guys see here within the chats, it's not that bad, right? If you have a question, you can ask, right? And I can read it, right? Someone asks, when will Oracle be released? That, will take me some time because I would rather to make something that is of, not at the level of that, and then release that first to see the reaction, to see who leaks it or whatever happens, right? Or, it will just be that you guys will only be able to see the information that it produces, and then that will be it. You just see when it says, okay, price should go higher here, price should go lower here, and such. So yes, I hope that you guys found this useful. If you guys have any questions, I'll give you guys some time to ask some questions. If there's no questions, ask within around 3 minutes, then that will be it. What is the significance of having one precision swing point across a trade in contrast to having 3 precision swing points? I mean, there's no difference really, to be honest. Would the entry level on a fib level, would the entry be on a fib level of the precision swing point? It doesn't have to be, right? It depends on the type of trader that you are, right? Price could just return to the precision swing point. Then you just put your, stop loss above it or below it if you're bullish, and then that'll be it really. You can, get more precise, of course, if you go to lower time frames and look for a lower time frame SMT, which is what we just looked at, that occurred within the precision swing point. How do I know that the SMT fill is high probability? Whenever it is, it occurs after there is sequential SMT. Right, sequential SMT and any one of these assets, on any one of these concepts, you put them together, it becomes high probability. Right? It's not about levels, this higher time frame level or this lower time frame level. It's about cracking correlations. That's literally what it is about. Right? So yes, I'll let you guys. Precision swing point has to happen in a true open. Well, it should, if you're bullish, that's basic knowledge here. You buy below a true open, so there should, right? Anytime you see these things happening, price is trading above the true open, right? If it's a bearish setup, if it's bearish price action, price had to trade above the true open to go lower, and you had to trade below a true open to go higher if it's bullish, right? Hope that you guys found this useful. And with that being said, have a amazing day.